we're here to you today, and we're not going to ignore the elephant in the room of what's been going on in the markets over the past week or so. But we want to start first with giving you a recap of what we've seen in the second quarter, how that relates to what's going to happen in the rest of this year, not only from an economic and an asset class perspective. So let's dig right into some of the returns we saw in the second quarter of 2024. There was a lot of optimism about inflation decelerating, the fact that the Fed would be able to come and cut interest rates as early as September and cut them pretty aggressively. That was the expectation by the futures market, and then that dovish tone from the Federal Reserve. This helped support global equities, really. The MSCI All Country World rallied for the third consecutive quarter. But what you can see in the U.S., it was really primarily driven by those growth sectors again. So that's technology when you think about it. That continued just like it did in the first quarter to rally the most. And when you look at fixed income was actually relatively muted for the second quarter. You can see that the longer-term treasuries and investment grade declined, but then we also saw tips and floating rates. So those short-term bonds do better. Commodities, they rallied again. You can see they were higher for the second consecutive quarter. It was primarily driven by precious metals, industrial metals. So precious metals being gold, silver. Gold continued to make record highs. Industrial metals, this was supported by the fact that we may be able to orchestrate this soft landing in the global economy. So it did help commodities there in the second quarter as well.